So, hello, and a massive hello to everybody. How we all doing? Rocking and rolling in a free world. Here we go. 50 pips, 10th of Feb 2019. No trade calls, recommendations, or response for their own stuff. We're here for educational purpose only. What's going on as we go into this new week? So remember, next Monday is going to be a holiday. So we're going into the end of the week is going to be into a long weekend. And let's see what we get. So we're going to have Asia back from holiday after the New Year's celebration. Will be interesting this week. On Friday, we've got a big Soma day. So basically, the way these tend to trade is they tend to be negative stocks, positive USD. We'll have to see. And on Monday, we got GDP out of the UK. Tuesday, we've got Carney and Powell speaking. On Wednesday, we have the RBNZ. Also with CPIs out of the UK and the US. On Thursday, we got retail sales out of the US, and we got retail sales out of the UK on Friday. So we'll have to see what's going on. Now, the picture is a little bit mixed at the moment, but it is what it is. We'll go through some interesting charts. I'm not going to update the charts or talk about charts where we've been doing regular videos and nothing much has changed in terms of the levels. But in terms of equities, there's something interesting playing out, right? Because we've had these magical ramps on the equities, especially into the closes, right? To continue to close these positive, these days, get them back positive, these weeks back positive. But really, we're still hovering, right? And there's a little bit of a, oddity here is where the U.S. markets continue to find this rip where the, the world markets or European markets aren't looking that pretty, right? Maybe so. I mean, if you look at the ES, right, and it's a similar chart. If you look at a lot of single stock names, we're very, very similar. On the weekly, we're retraced back and we're stuck at this 50 DMA, right? So the weekly close is going to be interesting, but the weekly is still holding below this 50 DMA. And if you look at the dailies, essentially what's happening is we're stuck inside this 200 and inside the 100 and those pivotal levels, right? So 2,700 for the ES, 25,000 for the YM, and 7,000 for the NQ. So nothing much is going on. We're just still kind of in this wait and see. As we still have this bid going on, as we're still seeing these magical bids coming in the US markets, and you can make a case for this ripping up higher technically, and you can still make a case for the big bear market to be in full force. Our base case here is still that whether you're long-term bull or bear, after this kind of move and where we're stalling at this kind of level, the healthy move would be to see some kind of retracement. If you look at it on the ES, we'd be looking for a move back down towards the 26s. And then, we'll be in a better position to know if we're rallying back up or if we're going to go back down. So we think that both for the bull case or the bear case, the healthy move is down here. Now, what's interesting is that it seems that this is all happening in a situation where, deteriorating earnings, companies are guiding lower. So the global picture also in terms of data isn't getting any better, right? Whereas before we got that grind higher with the hope of better data and better data confirming and more things to come. And now we're getting data's deteriorating, guidance is deteriorating, but the magical ramp is still there. And we've got the FOMC that went from a phase where they were saying we're going to keep on hiking because we really have to get back to that neutral rate. We keep on hiking until something breaks. And then they said, well, no, maybe, after the shenanigans, we're not really going to hike. And then after they had to save the market. And then this week, when the market started to look like it was getting a little bit heavy, then the save came on the Friday again saying, well, no, really, maybe we're going to have to do QE forever, right? So it's pretty suspect, right? And what does that mean? If you look at it in terms of some of the other charts, because let's see if this is going to play ball and cooperate, but I mean, this is really what's a little bit which you should be focused on, or you should keep in the back of your mind, especially if you're looking at equities, right? If we go back to this DAX chart, which we should all be familiar with because we've been looking at it, and we've been trading this to a certain extent, is you see DAX is just not looking very pretty, right? Still holding very bearish. We had the break below the 200. This is the retracement, and then the aggressive selling's been coming here. Now, the QE forever didn't save the DAX. If you look at something like Euro stocks 50, let's see if this is gonna bring up the CFD here. Where is it? Euro 50, maybe. Okay. CFD, I can't find it. Oh, there it is. Euro 50 is still not looking very pretty. If you're looking at the, not going to go through all of them, but, we know what the FTSE MIB is looking like in Italy. And if you look at the FTSE in the UK, also see the sell is coming right back in. And if you look at the picture, so look at something like the world, right? Let's look at the Vanguard Total World Stock Index. You see what's happening. It's not as bid. It's below the 50. It's still below the 100. And it's looking much heavier. So that's something which we're going to have to deal with. And if you think about that in the context of what's going on in some of the other asset classes, we'll look at bunds, right? See, the bund's gone completely cocaine angel again as the data's deteriorating in Europe, not looking too pretty. And if you look at what's happening in the US, like with the ZBs, as we said, we're done on our shorts. Those are very, very big moves. Here, it's starting to coil back up, and it's holding bid. So something isn't really squaring here, right? And as we've discussed, towards the end of the days, we've seen this a lot, where all of a sudden equities start to get heavy. The VIX is holding bid. Then you get the VIX smashed. You get USD JPY catching a bid, or crude catching a magical bid right into the close, which is, again, we maintain fairly suspect. We're going to still trade the levels, but this is something you have to keep an eye out for. So if you're looking at what the bonds are doing, if you're looking at how a lot of these asset classes are trading, we still think that the move in equities is a little bit suspect, and we still favor the downside. Now, another one to look at is J&K, right? We were on this for the whole of 2017, 18. We're looking for this to roll over, and now the big question is, what's happening now? We would suspect once again that this is an extremely interesting resistance, and that somewhere around this zone we should top, and we should see another leg back down, similar to equities. We'll see if it's for a little bit of a retracement or a pop. Our base case scenario still is that it's for a continuation of the downtrend, but that's what's playing out. The other piece of the puzzle is crude. As we said, right now, our view is completely neutral as long as we stay inside the 55.50. We expect this to be a trading range. We've got the 200 weekly stuck inside here, which is, again, very, very sideways chop. But our base case is that failures at the 55 indicate that we have to come right back down into the other end of the range, and that we'll continue to see range-bound trading until we see a strong break in terms of daily, weekly closes, either above the 55 or below the 50. So right now, it's going to be very interesting to see how this trades this week. Our rally is going to be sold. Are we ultimately going to make it back below this 50? Is this going to just rip back higher? Again, we'll have to wait and see. But our base case here is that we've still probably got a little bit more downside to go. And everybody's going to translate this, of course, into what's going on the dollar. And essentially here, we got a strong bid, and all of a sudden now you get all the dollar bulls who had gone quiet here, right? Now everybody's back going dollar, holler, dollar, dollar, we're going to 200. Our base case doesn't change. It's just nothing's going on here, right? Nothing's going on. You can get very excited, but essentially we're still stuck inside this 98 and 96. And because of the fact that everything is not necessarily moving in sync, we tend to see more things moving in sync where we're in at least we feel when we're moving in a risk-off environment, or where we're trying to get that kind of MOMO, or where we're trading dollar bearish than when we're trading dollar bullish. So again, our feel is that this is still a little bit suspect in terms of move, but as always, you can't trade on feelings. We trade on levels. So right now, this is the same as that kind of crude range 55-50, similar, right? It's stuck here. It's not doing an awful lot. Our base case from the weekly is still in play, that as long as this holds, we're going to see that move all the way back down into the 92s. The fact that we've closed here strong back above the 96 means this might take a little bit more time, or the downside is not as clear as it was when it was closing below the 200, right? Here, we thought we'd broken outside of the range and we do this. Right now, we have to default back into, well, we've gone back into range, right? So sideways. Closes below here, this is what we're looking for. Closes above, this is what we're looking for. So right now, it's still stuck in this very rangy environment. I mean, if you look at the most interesting things with respect to the dollar are Aussie and Kiwi, right? We've been discussing about structural shorts on the Aussie and the Kiwi. And what we said is based on the RBA, the quick pips were probably done. We had these beautiful little shorting opportunities here to play into the RBA back into the zone. That's done and dusted. Our base case doesn't change here, as they will probably continue to have to cut as the situation is not going to get better fundamentally for the economy, et cetera, in Australia, the housing bubble, you name it. We expect that this was another swing high. And as we said, when we trigger those initial shorts, we're looking for this whole area to get retested, and we're continuing for a continuation of this for new lows. Again, no need to go through the bigger picture here. So going into the week, any strength here for us would be more partial to look for topping and selling opportunities to add back or get back into shorts to retest this lower end of the range. And it'll be very interesting to see what happens on Kiwi also, because the percentage play in terms of quick pips were done here, as we discussed on this daily failure back into this cluster of moving averages. That's done. So here we'll have to see what's coming out of the RBNZ. Are we going to go straight down? Are we going to try to bounce? But our base case is still that as long as this holds, right, as long as this descending trend line holds, as long as we keep on making lower swing highs, this still has to be retested, and we're still looking for a move back into the 65 or lower. I mean, we've seen a lot of funky action on yen, but essentially yen and euro are not going anywhere, right? The yen is still stuck right here, and it's not doing anything. Just trying to take out week long, week shorts, but it's really not moving. So there's really not much to do or update on our discussions, what we said. And in terms of euro, it's similar, as it's just stuck at that 113. Right, let's get back on a weekly or a daily. It's still stuck. So is it going to get traction? Are we going to move out? Well, we'll probably know this week. We'll get a better feel for it this week. But to us, it still looks like there's just a lot of low liquidity chop and weak players getting taken out left, right, and center. We need to get a much more sustained move, and it's probably going to resolve when we get a clearer picture on what happens on the equity side. But right now, it's there's just not an awful lot going on in terms of stuff moving in sync. Those swing shorts on the commodity currencies, percentage plays are done. We have to either you're still trailing or you have to reload. In terms of euro and yen, it's all about action around that 113 and that 110. In terms of equities, it's all about those that 127 on the ES. Let's go on the NQ. That 7,000 on the NQ, right? You see how everything's kind of just stuck. But again, I'd like to draw your attention to the fact that a lot of those charts on even on some of the single stock names don't really look particularly healthy, even though we've seen attempts to ramp, right? So just an example, another one of the charts we really like to look at is look at the way Google closed. Look at the weekly, right? It's right back at this pivotal level and it's stalling. Now again, we see, as long as you've got Apple and Boeing ramping like there's no tomorrow, as always, it's just going to be very, very hard for the market to really roll. But if you look at a lot of the single stock names, they just don't look like they're getting traction. It looks like it's a lot of chop here, and that it's potentially more of a bull trap here. Now, again, it's really hard with some of these names. I mean, look at this this ramp on Boeing here, right? I mean, it's just it's hard to stay short on these single stock names. That's why we prefer to look at it in terms of the indices and on the stuff that's staying weaker. But look at this kind of action, right? You're getting all these gaps all over the place, even on Apple or on Amazon. So, you know, it's just looking like something's got to break, right? Something's got to give. Look at Amazon here, right? Kind of island pattern. He gaps down, gaps back up. It's just very, very messy, but it doesn't look like the picture of strength we had across the board in the past, right? And especially in terms of the way they're ramping now, it really looks like, even though some of the moves seemed on equity seemed a little bit let's say not healthy, right? Not two-sided market action. At least that was happening in the context of companies reporting, hiring, not guiding lower, more tax incentives, etc. Right? Now that grind or those pops are trying to happen in a situation where companies are guiding lower, companies are sacking more and more workforce. Situation in China is not getting any better. The PMIs, the data is turning lower. So it's really hard to see unless you get some mega news. But even if you get some mega news that's positive or is going to rip the market higher or QE, the fundamental, the business cycle and everything is just not looking supportive to sustained higher stock prices. So we'll have to see what happens. As always, you have to keep an open mind. You have to keep in mind that price is always real and is always perfect for the price it prints at that specific time. Because if you have a real position on, if you're just not talking smack, price is real, right? So you can't stay stubborn. You can't trade what you think should happen based on what's going on. You always have to let the charts guide. That's why there's no real reason for us to try and get short Boeing when it keeps on ripping new highs. It makes a lot more sense looking at tactical shorts on Google that's failing at a big level, right? There's no point trying to aggressively short USD CHF when you've got those silly overnight ramps. The SMB loves to pump it up. And, it makes a lot more sense to try and hold shorts on something like USD JPY because it's holding a little bit weaker. It's holding a little bit more range bound. As always, the talking and discussing is interesting, but when you're actually trading, the only thing that really matters is price and the levels. So be very, very careful about that. There's always a distinction between talking about what you think should happen, why things should happen, etc. But the actual trading always needs to be done around hard levels, right? And it's very black or white. There's no two ways, no way around that, okay? So hope everybody's having an awesome one. Talk to you guys soon. Take care, and for everybody, have a great week. Bye-bye.